Well, friends, we are going to start our today's class. So, last class we are discussing about this legal aspects of accounts and audit, isn't it? So, I am going for screen sharing. Just a minute, you will be able to see the PPT on your screen. Is it visible? Are you able to see it? Legal aspects of
Yes, sir.
accounts.
Now it is
Yeah,
visible.
it's visible, no? Okay. In a previous class, so we had initiated the topic. In fact, we started. Uh, it is in the third unit of your syllabus. So these are the things under this accounts of the companies.
Yes,
Previous
sir.
class I was telling you there are two chapters in the Companies Act which are quite important, quite relevant. That is chapter 9 which talks about the accounting aspect and chapter 10 which talks about the auditing aspects. And every company has to maintain its books of account and also has to get these books of account and the financial statements audited. Right. At certain sections we have discussed in a previous class what is books of account, what are financial statement, what is NAFRA, all these things we have discussed. Today we'll continue our discussion with that. Broadly, so if we summarize our previous days discussion, every company needs to keep books of account, is it not? And the books of account has to be kept at a particular place. Where is that place where we are supposed to keep the books of account?
At registered office, sir.
At the
At
registered
registered
office.
office,
Okay, normally at the
unless
registered
until
office.
resolution is, yeah.
Yeah, if the company want, it can keep somewhere else. But for that thing, notice has to be given to the registrar of the companies within 7 days of the board resolution that books can be kept elsewhere with full address of the place where books of accounts are kept. One notice needs to be sent to register of the companies. Okay, but normal situation, books of account has to be kept at the registered office of the company. This aspect we have discussed in the last class. What is the meaning of books of accounts? I had already explained you. No point in repeating that thing. How the branch office
Yes, sir.
accounts can be dealt. These aspects also
Vouchers,
discussed.
receipts, invoice.
Yeah, yeah. Now, but one more important
Sir,
thing we need to understand or need to remember that how long we are supposed to keep these books of account. How long?
8 years, sir. Preceding 8 financial years.
Preceding 8 years. That is one more important thing we need to keep in mind. And what is the meaning of financial statement? That also we need to understand. Financial statement includes balance sheet, statement of profit and loss, cash flow statement, statement of changes in equity, and explanatory notes. So this is the meaning of balance sheet as defined under Section 2, Clause 40 of Companies Act 2013. A similar kind of definition is also available in Ind AS 1. There also a similar kind of definition is there that shows what is the financial statement. In fact, the books of accounts are prepared so that financial statements can be generated out of this. Is it done? The financial statement includes balance sheet.
Yes,
This
sir.
is an example of a financial statement I had shown you. Example of statement of profit and loss. Example of statement of changes in equity. All these things. Examples of cash flow. Right. We have already seen all these things. And examples of explanatory notes. Every company prepare all these things. Prepares a balance sheet to show the position of the organization. Right. And to prepare a profit and loss statement to show the performance, prepares a cash flow so that activity wise cash inflows and outflows can be shown to the stakeholders, right? And prepare a statement of changes in equity, that what is the changes in the position of the equity, what was the opening, how it has been changed to the closing balance, that statement is prepared. And explanatory notes to explain various items included in this financial statement. And notes are normally presented by the company, right? These are the financial statements. And they should be prepared in such a way that it should give a true and fair view of the state of affairs of the company. And it has to comply with the accounting standards. And one more thing, this financial statement has to be prepared as per the format which is prescribed in Schedule 3 of the Companies Act 2013. Okay, Schedule 3 prescribes the prescribed format in exactly this format. Financial statements have to be prepared. That is why you can see every company prepares a balance sheet exactly in the same style. If you see the balance sheet, you see every company has the same kind of thing. Because every company prepares in a particular format which is called as the Schedule 3 format. Right? You can see it in the Companies Act 2013. There are certain exceptions. Exceptions are like electricity company, or exceptions are, let us say, banking companies, insurance companies, power generation companies. Right? There are some specific acts, like let us say Banking Regulation Act or IRDA Act. So these laws specify in which format their financial statements has to be prepared. So accordingly, they are different. Excluding those kind of companies like electricity company, electricity supply company, banking company, insurance company, power generation company, all these things. Normal companies prepare financial statement in a particular format, which is popularly called as Schedule 3 format. Right? In that schedule, exactly format is given. I'll try to show you that format also subsequently. And coming to accounting standards, the account has to be prepared. Company's account has to be prepared in a standardized way, and accounting standards are recommended by the central government. Okay, accounting standards are prescribed by the central government on the basis of recommendation made by the Institute of Chartered Accountants of India. Right? This is what I was explaining in a previous class. Central government may prescribe standards of accounting and addendum thereto as recommended by the Institute of Chartered Accountants of India. So ICAI recommends, right, and central government prescribes on the basis of the suggestions, or on the basis of recommendations received from ICAI and NAFRA. Central government examines all these recommendations, and after that only central government prescribes. And companies follow this kind of accounting standards while preparing their financial statement. Okay, and Companies Act 2013 also requires that auditor has to audit the financial statement, and he has to express his opinion on this financial statement, taking into consideration these formats, taking into consideration the accounting standards and also auditing standards. That is the requirement under Companies Act. Right? And the financial statement, it has to give true and fair view. What is the meaning of true and fair view? We are discussing that thing also in a previous class. Yeah, this is what I wanted to show you, that this is, you see, Schedule 3 Part 1. This is the exact format of the balance sheet. This is the extract from the Companies Act 2013. You can find every company prepares financial statement in this format. Okay, this is the format. This is the Schedule 3 Part 1. You see, that is what I had shown you the format, and you see exactly in the same fashion this company has prepared its financial statement. Okay, and various notes are there. These are the reference to the notes. So if you want to understand what is share capital, refer to note 1. If you understand what is this or the non-current assets, please refer to note 13. This is how you'll be able to understand the financial statement. And here you see this is the current reporting period. That means for the current financial year, this is the figure, and this is the previous reporting period. This is the figure. So that comparability is possible. One can compare what was there, what was the position 1 year before, and what is the position as of now. Okay, this is how the financial statements are prepared. This is the format of the balance sheet. This is the format, and this is the actual balance sheet. Okay. Similarly, this is the format of statement of profit and loss. This is how statement of profit and loss account prepared. This is the revenue from operation, other income. This is the total revenue, then total expenses. Then we get profit before exceptional items, exceptional extraordinary items. So in this particular format, you can go through this format. Every company prepares its statement of profit and loss in this format. Okay, are you getting me?
Yes, sir.
Okay, and you see, this is an example how you see exactly the same format. You see revenue from operation and other income, total income, then expenses. Right? You can see every company prepares a financial statement in a particular order. Okay. Okay. After this, we are discussed in our previous class. Now coming to this particular authority, which is called as the National Financial Reporting Authority, and in short, we call it as the NAFRA. Right? We'll see what is the power of this authority, what is the responsibility of this authority. That is dealt in section 132. Right? So this 132 section says central government may, by notification, constitute a national financial reporting authority to provide for matters relating to accounting and auditing standards. So that is the primary purpose, right? So this authority deals with accounting standards as well as auditing standards. Okay, then what is the exactly uh, the role of NAFRA? That is discussed in the subsequent section or subsection 2. In subsection 2, if you see, it discusses about the role. First thing is that to make recommendation to the central government on the formulation and laying down accounting and auditing policies and standards for adoption by companies. So this NAFRA will also make recommendation to the central government regarding accounting and auditing policies. NAFRA will monitor and ensure and enforce the compliance with accounting standards and auditing standards. So NAFRA will ensure that actually accounting standards and auditing standards are complied with or not. Right? It will enforce their compliance. Third role is that to oversee the quality of service of the profession associated with these activities. So various professionals are involved, like auditors, chartered accountants, and some situations. Other professionals are also involved. So NAFRA will ensure and NAFRA will oversee the quality of service provided by these professionals, whether they are providing up to the mark services or not. That is also to oversee that thing is one of the role of one of the responsibility of NAFRA, and to perform such other functions. So this is broadly the role of NAFRA. Okay, to make recommendation and to monitor and enforce the compliance of accounting standard and to oversee the quality of the professionals. Okay, are you getting me? Okay.
Yes, sir. Yes, sir. Yes, sir.
Okay, fine. Now we'll be seeing how these financial statements and auditor reports, how they are linked. Right, financial statements you have understood. I think previous class we had discussed. Now also I repeated. Can you recall what are these financial statements? Can you give me the list of the financial statements?
Balance
Anyone?
statement,
Which one?
P&L.
Let us say
Sir,
first one.
balance sheet.
Balance sheet.
First one is balance sheet, sir.
Balance sheet. Okay.
The position state. Yeah. Second, P&L.
P&L. That is called as statement of profit and loss. Okay.
Statement
Third one.
of profit and loss.
Third one.
Third one, cash flow statement.
Cash flow statement. That is one more important statement. Is cash flow statement. And
Sir. And asset.
fourth one is
sorry.
statement of changes in equity.
Statement of changes in equity.
Changes in equity. So if you look at the balance sheet, you can find one portion of the balance sheet is assets. You can find assets are again classified into two parts: current assets and non-current assets. And the other side, okay, assets are in fact assets shows where monies have gone. That means they are the investments. And where from money has come, money comes from two sources. One is equity, one is debt. Right. So one portion of the balance sheet you will find out equity. So how this equity portion is changing. So one statement is prepared that is called as a statement of changes in equity. That is also one more financial statement. Right. So you told 4, and what is the last item? That one is explanatory notes. Okay. These are the 5 pages.
Yes, sir.
Explanatory notes.
Explanatory.
Right. The financial statements, including consolidated financial statement. What is this consolidated financial statement? Sometimes what happens? Some companies have subsidiary companies. Right. In that case, they have to prepare a financial statement for the entire group. That means holding and subsidiary taken together. That is called as the consolidated financial statement. If the company doesn't have this kind of subsidiary companies or associate companies, they do not prepare consolidated financial statement. Consolidated financial statement question will come only when the company is having some kind of subsidiary or associate company. Right. The financial statement, including consolidated financial statement, if any, shall be approved by board of directors. So this is one more legal requirement. Right. This financial statement, which are prepared, that's a balance sheet, statement of profit and loss account, has to be approved by whom? Who will approve it?
Board of directors.
Board of directors. Before they are signed on behalf of the board. Then it will be signed on behalf of the board. First it will be approved by the board. Then on behalf of the board, the following people will be signing. Now it is important for us to know who are the people who are supposed to sign. One is chairperson of the company. Okay, whoever might be the chairperson, he has to sign it. or chairperson of the company if he is authorized by the board. If the authorized by the board, then chairperson can sign. Or if chairperson is not there, so many companies may not have chairperson, then or by two directors, out of which one shall be managing director, right? Two directors should be signing, one of them should be managing director, and the CEO and the chief executive officer if he is a director in the company. So two directors has to sign, one should be MD and the CEO if he is a director of the company. Then CFO is also supposed to sign. Then company secretary, wherever they're appointed. If the company is having a company secretary, then he has to also sign. So two directors has to sign, CFO has to sign, and company secretary, if it is there, he has to sign. If CFO is not there, then only two directors will be doing. Right? And if it is an OPC, that is one person company, then one director is suffice. One director may sign the financial statement. And auditor's report shall be attached to that financial statement. Auditor's report is always an attachment to the financial statement. Now, let me show you that financial statement which I had shown you sometime before. Just 1 second. Okay, this is what I was showing you. Now you see how it looks like. This is what statement of profit and loss I am showing you. Okay, are you able to see it?
Yes, sir.
Okay,
Yes.
you see here, you see in this company two directors have signed. One is, you see, the chairperson. Here it is chairman come MD. He has signed, and one more director has signed. Here director signed. So two directors has definitely signed. And since this company is having a company secretary has also signed. Right? You can look at any company's financial statement. At least 2% must have signed. If company secretary has not signed, you have to understand that there is no company secretary in that company. If the company secretary is there, then he has to sign. After that only, okay, so they are signing on behalf of the board. You see, that's why they are writing for and on behalf of the board of directors. Right? Board has approved it, and on the behalf of the board, these people have signed. Then it goes to the auditor, and its auditor writes in terms of our report of event date attached. That means auditor's reports are attached to the balance sheet or attached to the financial statement. Understood? And here in this company, this is a joint auditor. Therefore, two auditors have signed. Some companies, there is only one auditor will be signed. Some company, two auditors. In some case of banks, you can find out there are 8 auditors. All of them will be signing because this is a case of joint audit. In large companies, sometimes multiple auditors handle the auditing activities. Okay, are you getting me?
Yes, sir.
Okay.
Yes, sir.
This is how the financial statements are prepared. They have to approved by the board of directors and signed by these people, right? And auditor's report shall be attached to every financial statement. Okay. Now, coming to next part, what is the right of the member as regards to audited financial statement? The copy of the financial statement, including the consolidated financial statement, if any, and the auditor's report and any other document which are supposed to be attached to the financial statement, shall be sent to every member of the company. That means every member has got a right to receive all these financial statement and also all the related documents. Okay, every member has to receive, and every trustee of the debenture holder. If the company has issued some debentures and there is a debenture trust, and the trustees of the debenture holders are also has got a right to receive this audited financial statement. Right, and all these financial statements are to be sent to these members and debenture trustees, etc., before not less than 21 days before the date of meeting. You know, to hold the annual general meeting, 21 clear days notice is required, and this financial statement also supposed to be sent before not less than 21 days. Okay, so member has got a right to receive a copy of the financial statement. Right. Now, one more requirement is that in the annual general meeting, when these financial statements are adopted, then one more activity is required. That is, these financial statements are also required to be filed with the register. You have to file a copy with ROC. Okay, the section 137 says the financial statement, including consolidated financial statement, if any, along with all documents which are required to be attached to such financial statements under this act, duly adopted at the AGM. So after adoption of the AGM, shall be filed with the registrar. Okay, so there is a requirement that it has to be filed with the registrar. And within how many days? Within 30 days from the date of AGM. Okay, in the meeting chapters we have discussed that within what time we are supposed to conduct the annual general meeting. Any of you can you recall? Can you remember?
Sir, annual, sir. Sir, yearly once.
Annually has to be held, but let us say, for example, let us say financial year, just now financial year, let us say 1920 has ended. When you are supposed to conduct AGM?
Sir, not more than.
No, March only
Sir,
financial
in between,
year.
it is less than 18 months, sir. In between two meetings, the time period should be 18 months maximum. In between two AGMs.
Yeah, you can see that chapter once again, but normally you will understand that within 6 months from the end of the financial year. That means if see March we are ending, okay, within 6 months means what? By September end, normally annual meeting should be held. In exceptional circumstances, we may delay the AGM, but in normal circumstances we are talking about, then it should be held within 6 months. And sometimes authorities, or let us say government also permits, government also extends this due date of holding meeting, but in normal circumstances it is only within 6 months from the end of the financial.
Within 6 months.
So let us say by September AGM has to be held. Then September means then further 1 month, then 30 days from the date of the AGM, this financial statement has to be submitted to the ROC. Submitted means it will be uploaded in electronic form. Right, scanned copies of the financial statements are uploaded to the ROC. Okay?
Okay, sir.
Within 30 days from the AGM.
Now it is online, sir. There is no need to
all these forms,
manually.
all these forms, if you find
Online.
out evening from formation of the company onwards, your memorandum, articles, all these are now for submitted electronically. All are e-forms. E-forms. And in that e-form, you have to attach the scanned copy of the financial statement. The copy has to be scanned and it has to be attached. Then one digital signature has to be attached with that. Then it will be assumed that it is signed. Then it will be uploaded. So wherever I say it has to be filed with the register, that means you need not go to the ROC office. Sitting here, you can upload. Filing will be over. Okay?
Okay, sir.
Okay, if for some reason the annual general meeting has not been held, then what will happen? Then the financial statement which are duly signed should be submitted to the ROC along with the statement of the fact and the reasons for not holding AGM. So this fact has to be informed that AGM could not be held, and the reasons for not holding annual general meeting shall be filed with the registrar within 30 days of the last date before which annual general meeting should have been held. If it is held, then within 30 days. If it is not held, then from the last date by which the AGM should have been held, within 30 days from that date, this financial statement duly signed along with the fact that AGM has not been held and the reasons for not holding AGM should be filed with the Registrar of Companies. Okay, are you getting? That means financial statement has to be filed. Whether you hold the AGM or not holding AGM, doesn't matter. You have to file the financial statement, annual financial statement. Okay, that is why we say the companies are very transparent. Once it is filed with the registrar, means it is a public document. Anyone can see. Anyone can download it and see it. So anyone from any part of the world can see what is the position of the company, what is the performance of the company. So it becomes an open document. Therefore, there is a requirement that these documents needs to file on annual basis. Okay, and if these provisions are not compliant, then there are penalty provisions. Right? If the company fails to file the copy of the financial statement, sometimes we see some companies forget to file. If they fail, then heavy penalties are imposed. So if the company fails to file the copy of the financial statement, then what will happen? The company shall be punishable with a fine of 1,000 rupees per day. Okay, till the time till when the failure continues. Every day 1,000 rupees fine will be paid. Automatically it will be computed by the system. Okay, 1,000 rupees for every day during which the failure continues. But there is the upper cap. It will 1,000 rupees per day, but the maximum amount is 10 lakh rupees. But it shall not be more than 10 lakh. So company, if it is not filing, company should be ready to pay penalty of up to 10 lakh rupees. With 10 lakh rupees, it will freeze. Till that time, it will continue calculating every day 1,000. So that is the punishment for the company. In addition to that, the managing director, CFO of the company, in the absence of CFO, then a director who has been assigned with the responsibility of this kind of thing, okay, shall be liable with an imprisonment for a term which may extend up to 6 months. So 6 months imprisonment, or with a fine which shall not be less than 1 lakh rupees. So minimum fine is 1 lakh rupees, but which may extend up to 5 lakh, or both. So there might be imprisonment, there might be penalty, there might be both for the directors and also for the company. Therefore, formation of company, now you have understood. We have to comply all the requirements. So legal aspects needs to be complied seriously. Otherwise, this kind of consequences one might have to face. So if any of you are thinking of forming a company, you have to ensure that all legal compliance requirements should be met. All statutory compliances should be taken care of seriously. Okay. Now, there is one more aspect relating to this particular chapter. Chapter 9 is about internal audit. Okay, I told you the chapter 10 is about audit, but that is about the statutory audit, or we call it as external audit. In section 138 deals with internal audit part. We'll be covering this part now. There is a class of companies, not all companies, only a particular class of companies are required to appoint internal auditor. And who can be their internal auditor? They may be chartered accountants, they may be cost accountant, and there may be other professionals also. Okay, now here is that cost accountants can also be appointed as internal auditors of the company as per requirements of Companies Act 2013. Right? And central government may by rules prescribes the manner and the intervals. Intervals means the frequency, whether internal audit needs to be conducted every month or on half-yearly basis or on quarterly basis, that central government may prescribe. How it will be conducted, that manner will also be prescribed through these rules. Okay. Now, a rule has already been prescribed by the central government. We'll see who are this class of companies to whom this internal audit provisions are applicable. Right. First of all, every listed company. You know who are these listed companies? Any idea you have? We have discussed this in our initial classes when we are discussing about various types of companies. Listed company means can anyone of you?
The company's shares are traded in any stock exchange.
Yes, if the company securities are listed in a recognized stock exchange, we will be calling that company as a listed company. So every listed company has to appoint internal audit. Then unlisted public companies also have to appoint, but if these conditions are met, paid up capital of 50 crores or more during the preceding financial year. You have to see what is the paid up capital. If it is 50 crore or more, then internal auditors need to be appointed. or turnover of 200 crores rupees or more during preceding financial year. Right, let us say now financial year 2021 we are talking about. For the preceding 5 financial year, that's 1920, we have to see what is the capital. If it is 5 crore or more, then internal audit will be applicable. Or turnover is 200 crore or more, or outstanding loan or borrowings from the banks or public financial institutes exceeding 100 crore or more, or outstanding deposits of 25 crore or more. If any one of these conditions are met, then internal audit provisions are applicable and the company has to appoint an internal audit. This is about the listed company and this is about unlisted company. All listed companies are coming under the purview of internal audit. Right? Every listed company, definitely there will be an internal audit. Unlisted company, this is the provision. Now for private company, there is some more requirement, some more conditions are there. For private companies, if the turnover of 200 crore rupees or more during preceding financial year, then internal audit is applicable. Or outstanding loan and borrowings from the banks or public financial institutions exceeding 100 crore. If 100 crore or more is borrowing is there, or turnover is 200 crore, then internal audit is applicable. Okay. Okay, understood. So if I will be summarizing this particular condition, you see, these are the criteria. One is income criteria, then loan criteria, then capital criteria, then deposit criteria. Okay, on this basis, decision has to be taken whether internal audit is applicable or not. Okay, I think you are seeing this picture. Okay, you can remember it like ILCD. I for income, L loan, C capital, D deposit. ILCD. Listed company always applicable. No conditions is there. Unlisted company income more than 200, more than or equal to 200 crore. Loan 100 crore. Capital 50 crore. Deposit 25. Okay, so 200, 100, 50, 25. Okay, you see reduction is 50%, 200 to 100, 100 to 50, 50 to 20. And for private company, income criteria is how much? Can you read it out?
200.
200 crores. A loan is?
Loan 100 crores.
100 crore. So you see, if these criteria are there, then private company has to appoint an internal audit. Right? Got this idea? So
Yes,
with this, you see, we covered all the sections of this particular chapter, chapter 9, which deals with, chapter 9, which deals with accounts of the company. You see, books of account we covered 128, 129, financial statements, 132, NAFRA, 133, accounting standards, 134, financial statements and audit report, 136, members' right to audit financial statement, 137, copy of the financial statements to be filed with the register, and 138 is talking about internal audit. This is the entire thing which are there in the chapter 9 accounts of the companies. Okay, and these things we have covered. Now the next chapter is about auditing. Okay, and this is about chapter 10. If you have a look, these are the provisions we are supposed to learn under chapter 10. Okay, can you read it one by one?
Appointment of auditors.
Appointment of the auditors, we will see what is the provisions, who can be appointed as the auditors, we will be discussing that. Then
resignation of auditor and giving of special
resignation
notice.
of the auditor. Very briefly, we will be discussing about this. I will not go deep into that. That's a long process. We need not remember everything. We need not. Only very briefly, I will be telling you. Eligibility qualifications also I will be explaining you. Remuneration to the auditors, powers and duties of the auditors. All these things we are going to learn in a very brief manner. Auditor not to render certain services. Auditor to sign the audit report. Auditors to attend general meeting. Punishment for contravention, that also will be learning briefly. The central government to specify audit of items of the cost. That is the cost audit for certain companies. Central government is to prescribe these aspects we are going to learn in the chapter 10. Okay, so chapter 10, the title of the chapter is Audit and Auditors. Okay, 9 was about accounts and chapter 10 is about audit and auditors. And they are connected chapters. Only when the accounting gets completed and the financial statements are prepared, then auditors starts his duty. And in the previous chapter also we had discussed one kind of audit which is called as the internal audit. Is it not? And this chapter, the audit we are talking about, this is called as external audit. Or they are called as statutory auditors also. Because these auditors are appointed as a statutory requirement. Right? And these auditors report to the shareholders. Internal auditors report to the management. These auditors, that means statutory auditors were appointed under chapter 10. They report to the owners of the company. And who are the owners of the company?
Shareholders.
Shareholders. Board of directors are not the owners of the company. Internal auditor may report to the board of directors or at any level of management. It depends. But statutory auditor has to report to the shareholders. If you see an audit report, you can always find that it is addressed to the shareholders because they are the real owners of the company. Right. And here what happens? The scope of this audit, what we talk about the statutory audit, is defined by statute. Right. Why we call it as a statutory audit? Because the scope, what the auditor can do, what the auditor cannot do, what the auditor is supposed to do, what the auditor is not supposed to do, this entire scope is broadly defined under statute. Right. How audit has to be conducted, what are the aspects has to be covered, and most of the things are governed by the statute. Law specify this is how it is to be done. That's why we call it as a statutory audit. Okay. And what this auditor does, he only gives an opinion. When you talk about audit report means it's the opinion of an external auditor, opinion of a statutory auditor about the truth and fairness of the financial statements. That means whether the balance sheet, statement of profit and loss, cash flow statement, and statement of changes in equity, explanatory notes, etc., are giving a true and fair view or not. Auditor gives an opinion on that. Okay, auditor's reports includes that thing. Right, that is called a statutory audit. So this is, we discussed about the distinction between internal audit and statutory audit and exact legal requirements and legal aspects behind this statutory audit and the audit we will be discussing in our next class. Okay, so it will be probably tomorrow. You got any query? Any doubt you have on any aspects?
No, sir.
Okay,
Clear.
thank you very much. So we'll be catching up in your next class.
Thank you, sir.
Thanks a lot. Thank you.
Okay. Welcome, sir. Good night, sir.
Good night.